Hello, and welcome to Invest Education Hub. Today, we are going to talk about house. Yeah, the idea of owning one has been sold as the ultimate financial goal for generations. But is it still the best move you can make with your money?
Because let's be real, in today's market, with prices through the roof and interest rates that make you wince, that whole dream can feel pretty out of reach. So we have to ask the question, is buying a house still the key to wealth, or is it actually a financial trap? Whoa, strong words, right? That comes from Ramit Sethi, and he basically argues that the game has completely changed. The old rules our parents followed, they might not apply anymore. So let's dive in and see what's really going on.
Okay, first things first, let's honor the traditional wisdom, because honestly, the arguments for buying a home are powerful, and for a long time, they've created a ton of wealth for millions of people.
The pro-homeownership case, the one you'll hear from experts like Dave Ramsey, really stands on these three pillars. You lock in your housing cost, no more worrying about rent hikes. Every mortgage payment is like putting money into a savings account. And at the end of the day, most millionaires own their homes outright. It's a massive asset.
And this is the statistic that just stops you in your tracks. A 40 times greater net worth. That's a huge number. It kind of feels like debate over, right? But is it telling us the whole story?
Well, here comes the other side of the argument. The investor's view is that this 40x number, while it might be true, is actually pretty misleading. It's because most people, especially first-time buyers, completely ignore two huge concepts that can flip the math on its head.
So, the first big idea is something called opportunity cost. Think of it this way. Every single dollar you have is a little worker. If you tell it to go do one job, like be part of a down payment, it can't go do another job, like, say, grow for you in the stock market. You've made a choice, and that choice always has a cost.
And you know who understood this better than anyone? Warren Buffett. He actually put off buying his first house for years. Why? Because he didn't see a down payment as just a deposit. He saw it as investment capital that could be making him way more money somewhere else.
Okay, and the second concept is what Ramit Sethi calls phantom costs, and these things are killers. These are all the sneaky expenses that go way beyond your mortgage. Property taxes, insurance, a new water heater, a leaky roof. They're called phantom because you don't really see them until the bill shows up.
And here's the real kicker. Your profit on a house isn't just what you sell it for minus what you bought it for. Oh no, you have to subtract years and years of all those phantom costs. And when you do that, what looked like a great investment can suddenly turn into a massive money pit. All right, enough theory. Let's get down to brass tacks. We're going to run the numbers. A head-to-head showdown. Two different paths over 10 years to see which one really comes out on top. Let's start with a hypothetical $500,000 house. We'll be smart and put down 20%. That's $100,000 to avoid that pesky mortgage insurance. But look how quickly the costs stack up beyond just the mortgage. You've got property taxes, insurance, and a good rule of thumb is to budget 1% of the home's value for maintenance each year. And when you add all of that up, boom, your real monthly cost to own this house is almost $3,800. That is way, way more than just the mortgage payment that most people focus on.
So what's the alternative? Well, what if you rented a similar home? In many cities, that might cost you around $2,300 a month. And just like that, by making that one choice, you freed up nearly $1,500 in cash every single month. That's money you can now put to work. So what do we do with it? Let's take that $100,000 down payment you didn't spend, and let's also invest that extra $1,478 a month. We'll put it all in a simple low-cost S&P 500 index fund, something like Fidelity's FXAIX, and just assume the historical market average of a 10% annual return.
So, after 10 years, what do we have? The results are pretty jaw-dropping. The homeowner, they've built up about $218,000 in equity. That's great. But the renter who invested? Their portfolio could have grown to over $500,000. That is more than double the wealth, with way more flexibility and zero phantom costs.
Okay, wow. I mean, those numbers are pretty clear, right? But wait a minute. A spreadsheet cannot tell you how to live your life. The right decision here is super personal, and it goes way beyond just the numbers on a chart. So how do you know if you're really, truly ready for a house? Well, Ramit Sethi came up with this brilliant 5-question checklist. And if you can't give a confident yes to all 5, you might want to hit the pause button. First up, are you planning on staying put for a while? The costs to buy and sell a house are super high, so you really need a long time frame. We're talking 10 years minimum to even have a chance of it making financial sense.
Question 2. Can you actually afford it without becoming house poor? If your total housing cost is more than, say, 28% of your pre-tax income, you just won't have enough money left over to save, invest, and, actually live your life.
Number 3, have you saved a 20% down payment? Now look, this isn't about whether you have to put 20% down. It's about proving to yourself that you have the financial discipline. If you can save up that much cash, it's a really good sign you can handle the surprise cost that homeownership will absolutely throw at you.
This one's huge. Are you okay if your house loses value? Because guess what? Prices don't always go up. If you're buying a home to be a home, a place to live and make memories, then a dip in the market won't crush you. But if you're just buying it hoping it'll appreciate, you're not an investor, you're a speculator.
And finally, the most important question of them all. Is this your dream or is it someone else's? Buying a home should make you feel excited and secure, not stressed out because you're trying to live up to what your parents or society expects of you.
So what's the bottom line here? The numbers might seem to favor investing, but the best financial choice isn't about finding the best asset. It's about finding the best path for your rich life. Whether you build wealth in real estate or the stock market, the goal is the same: create a life you genuinely love. The real power is making a conscious, informed choice that's right for you.